All right. Good morning, good evening, good night. Welcome into the Nifty Q Show. We're interviewing founders, leaders, and builders in the non-fungible token space, as well as the Web3 industry. Today, I'm sitting with someone who's done pretty much all that. I'm sitting with Mike Finch, founder of Parada Capital. We'll be touching on what Sudoswap 0% royalties mean for NFTs, how you should be playing the Ethereum 2.0 merge, how financialization of NFTs will play out in the back half of this year, and much more. Mike, fresh cut. You're grinding out there in the office, although you do have some artwork. I know. How you doing, my man?
I'm doing good, man. I'm doing good. It's a bit of a busy day, so kind of a change for this bear market summer we find ourselves in, but things are good. No complaints. Looking forward to this.
All right, so here's the deal. If you are just tuning in to this episode, we had Mike on barely like 2 weeks ago, and usually I like to like separate with like a couple months my interviews with individuals in the space. But of course, Mike being a good friend of mine, and also having a lot of, I think, experience just in the space in general, but ways that he can connect, his experience in NFTs as well as, crypto and CeFi and all these different things. It helps us when something big like the Ethereum merge happens. So really, we were talking last week. We were like, hey, we really want to hit Ethereum 2.0, all this stuff. And then Sudoswap came out. And then you also had a bunch of meetings this morning. So I think we like tripled up on what we're actually going to talk about here. But yeah, I'm just excited to have you. So this is a dual episode. If you want to get Mike's background, go to like the other interview 2 weeks ago. That's already, feels like it's 10 years in like, I guess the what we were talking about back then doesn't even feel that relevant. But let's just get started, man. Like
Yeah, no doubt.
financialization of NFTs, we've been hearing about that a little bit. You hit me with that message this morning. What does financialization of NFTs via Sudoswap that we saw came out, as well as ETH 2.0 and things that you're hearing? What does that even mean?
Yeah, sure. I think broadly, it's kind of taking the NFT token and increasing the financial utility of it, right? So like you see a little bit of this with some different platforms trying to do borrowing and lending, which is kind of the first step in any sort of financialization. It allows people to come in and maybe get access to the utility of an NFT right before an airdrop, right? So a lot of people would say borrow a Bored Ape or Mutant Ape before um, a big airdrop, and they'll certainly pay a fee for that. So the hope is that the fee they pay will be less than the money that they sell the airdrop for. So you kind of see a start there, but it really seems to me with this launch of Sudoswap's AMM and these various pools and whatnot that they have launched and have booming from like a user and a volume standpoint, that we're going to start to kind of move into more DeFi centric things with NFTs. So you're going to start to see a lot of market makers, for example, come in and be able to um, classify NFTs in kind of more fungible ways. We can get into that certainly. But that is overall going to increase liquidity for a lot of folks. I know everybody's kind of struggling right now. I think largely as a symptom of the ETH merge. Floors are going down as people look to move to ETH for this airdrop. That is expected. We can certainly talk on that with the ETH merge coming up and kind of some potential effects of that and a good ways to kind of think about where the value lies there. But the financialization, I think overall will be a good thing. I'm sure there will be kind of bumps in the road and hurdles and whatnot, like we saw in DeFi as DeFi really started going. But even if you look today in largely kind of like a dead DeFi world, TVL is in the billions, and it's very much a household name. So long term, I think it'll be really good for NFTs.
So for those people that are sitting there thinking, okay, you kind of gave me a little bit of the lowdown on like this idea that more financial products will be released for NFTs. Is this like a Q3 thing? Is this a Q4 thing from what you're hearing behind the scenes? Like, and tell me any details and those people listening, any details you can about some of the calls you're having. But is this like happening in the next couple months? And then what does that look like from what they'll be able to do with their NFTs?
Yeah, so I'm just kind of catching up on this a bit now, but it does sound like by the end of Q3, things are going to really be happening in a major way, at least behind the scenes. Maybe not like um, readily available and on kind of the front page of crypto Twitter, but those things being like a lot of these major traditional crypto market makers moving into the NFT space, right? So your Alameda, your Wintermute, like so many of these big firms who traditionally would just market make fungible tokens, maybe run their own kind of proprietary strategies off of that market making as well. They'll start to do that in the NFT space. Those firms, as well as a handful of new players, have been researching kind of the best way to do this, and they've all, as you may or may not have seen, been collecting data and trying to um, put together like a price estimate, right? Where you can kind of plug in your NFT and get a price estimate based on all of the data that exists in NFTs. The problem with this, of course, is that NFTs have not been traded with a significant amount of volume for very long. So the data is really limited. It's hard to come to really concrete conclusions based on only a couple months of data, maybe a couple of years in the case of BAYC. It's even been that long. So there's still kind of mixed feelings on like how much these quantitative price estimates are going to be helpful. But effectively, if we see post merge and into Q4, a lot of these market makers come on board to platforms like Sudo and start to kind of see volumes pick up and start to see NFTs exist in a major way across multiple platforms like OpenSea and LooksRare and X2, Y2 and Sudo and all these different platforms that have kind of popped up. You start to see things that are reminiscent of early DeFi or even early crypto, where it's great for these market makers because there's going to be a ton of arbitrage to be had, where markets are still going to be somewhat illiquid. The markets are still going to be super nascent, so they can go out and make money in a major way just by turning these NFTs through. So to answer your question on timing, it does seem like by end of year we're going to see a really different NFT market than we see today. The NFT market you see today is that you have some FUD come out, like the Moonbird CCO. Doodles is kind of going through it right now, and you don't really have much bid, right? Kind of similar to the recent crash we had with ETH, where it went all the way under $1,000, right? Everybody's so scared. We're going into a recession, yada yada yada, and the bid, people on the buy side just completely disappear. And I think, hopefully we're going to lose a little bit of that illiquidity and gain a bit more liquidity in the form of these market makers.
So kind of like extrapolating on that thought, is the idea that this is good for the retail user because eventually we'll get to the scenario just like we see in crypto where banks are comfortable trading now with ETH. Are they going to be ever comfortable just buying JPEGs, and like this gives them access to that? I'm being a little facetious, but like does this give the ability for those people to feel comfortable, maybe not the biggest banks, but the hedge funds, all these different things, like to buy NFTs? Is that the idea?
Yeah, I think you kind of have like the broad institutional term, and it kind of exists in a couple layers. And the first one is those hedge funds, right? Those folks who are looking for edge in any type of market. Those large hedge fund types, not any not any like a BlackRock or anything crazy like this, right? But like kind of your larger macro funds, as people would call them. Most of them are at least looking at crypto and looking for opportunity, looking for some edge over others based on their size. So yeah, maybe you see that eventually. I mean, it's hard to say that they're going to be like looking at Bored Apes or Doodles or anything like this and kind of buying it in the same way they do Bitcoin, right? To just kind of hold it as an inflation hedge. It's not to say that JPEGs at some point won't be an inflation hedge. It's just to say that like it's kind of hard to see that happening. But the gentleman I was talking to this morning, one of the things he was excited about with NFTs is that because of the actual like token properties to them, you could kind of expand NFTs much past just JPEGs, right? And you could start to really tokenize a whole lot in the economy in general and across various markets. This has always kind of been like a a hot topic or like a futuristic, kind of selling point for a lot of folks in the crypto space to the traditional space to say like, oh, all stocks will be tokenized at some point, all real estate will be
STOs.
tokenized, STOs, right? So you have to kind of take that with a grain of salt, but you know, the people really grinding it out behind the scenes, especially in this kind of like financialization sector, see real opportunity to take NFTs just past, or pretty far past JPEGs, I should say, into other really interesting things that can be, traded, and markets can be made, and all that fun stuff.
Yeah, I want to give a quick shout out to the chat as we continue this conversation, and we'll be jumping around, staying within that financialization, I think, like umbrella, and we'll even have like some more questions, I'm sure, on that. But we definitely want to hit Sudoswap ETH 2.0 and kind of how all this stuff goes together. Hash Rhymes, Llama, Cryptophagia, Easy and Crypto, Fun Uncle, Addiction Helpline, Flubber. Everybody's in the house today. So, guys,
Nice.
if you have any questions, please drop them in chat. We definitely want to get as much as we can out of this one. So we mentioned, in that conversation that, bear market ish happening. You guys obviously are trading a little bit of JPEGs, NFTs on that side. We say JPEGs, but we mean that in the nicest way possible. That's kind of an
Of
inside
course.
joke with us. But you're trading a little bit of NFTs with the fund. So how are you guys playing this? Because it does feel like to me that we are definitely probably at the like most apathetic I've seen the NFT market in a while. Like it just feels like nothing's happening generally. I know there's a couple projects here or there, but
Yeah.
it does feel like we're almost in the midst of this apathy. Volumes are low. So how are you playing it? And yeah, let's run it from there.
Yeah, I mean, just as kind of like initial broad context, right? I think with NFTs, we obviously saw the big run up, and Yuga and Bored Ape was the one to kind of reach mainstream first. Doodles had their time. A couple other blue chips kind of had their time in the mainstream, be it in like a magazine or a newspaper or whatnot. And floor prices were really high, and you started to see a lot of other kind of low tier, mid tier projects start to really take off, right? Like you even saw the Goblin Town project kind of get going on that wild PR moment they had. So it seems to me broadly that NFTs have gone through the same thing that DeFi has and that ICOs have, and now we're kind of finally fully washing out a lot of the nonsense that has existed, a lot of the kind of like short term speculation. Um, if you look at the NFT market now, 99.9% of the projects out there have gone to zero or close to zero, right? Because those are teams who have basically tried to kind of build some hype, get some trading volume going to pull those royalty fees out, be they anywhere from 2.5 to 12.5%. And then often, as we've seen, like they just will not kind of continue with the project in any way. Maybe they'll quote unquote hand it over to the community or whatnot. And same thing happened with ICOs. Same thing happened with DeFi. And I think a lot of people got burned there and lost some ETH. So from our perspective, we're really just kind of trying our best to buy low and sell high, as simply as that sounds. I think there's still a lot of money to be made in the NFT space, and it will be here for many years to come, just like you see DeFi. But it's a very difficult market right now to trade in the short term. It's incredibly PvP. It's incredibly player versus player. So you don't have much margin for error. You need to, you need to have some sort of edge if you're trying to just flip these versus hearing about like the Aliens project, LIENS, right? That was one that did really well over the past couple of weeks, and I tried to hop in at like point 0.2 or something like that, and couldn't even really get in. It was too difficult because the floors were going. So you need edge, I think. So that's been our focus, right? It's just kind of support the blue chip projects like Doodles. We're big fans of that. Yuga, obviously, what they've got going on. I still think other side, even though it seems a distant while away, will be a major hit within crypto and probably outside of crypto. So that's our goal, right? Like if you're somebody who was fortunate enough to kind of take some ETH off the table and sell some NFTs closer to the top, theoretically, this is when you should be buying, right? When everybody else is capitulating and there's blood in the streets and all that fun stuff.
Yeah, I want to break down just a quick lightning question here for you. This idea of PvP versus PvE. Are you saying that like in a bull market, it's generally just everybody's making money? It's almost like us against the dealer in a sense. And then PvP when it's like scraps on the table, essentially? Because that's a dope analogy.
Yeah. Yeah, exactly. Like I think a lot of people in the trading space will refer to tougher markets as PvP, where um, really the only people that win there are the exchanges, those that are hosting the traders battling it out. So you're not trading against folks who are lesser off than you, right? Is kind of the best way to put it from like purely a market standpoint,
Mm.
right? So if you're somebody who's been in NFTs for a year and the NFT market is hot, you might be buying or selling from somebody who's been in NFTs for a couple of weeks, right? So you know better how the market works. You understand how the illiquidity of NFTs works, and you have some natural edge just from the amount of time you've been in versus these other folks, right? But where we stand today, everybody's kind of on similar footing. And if you're not a whale or you're not spending money on the tooling to really understand where the money's flowing at an
Mm.
early stage, it's really hard to have any sort of edge, and you end up just kind of donating your ETH or your dollars to folks who do have edge over you.
Gotcha. One last lightning question before we get into Sudoswap. I think we should just move there. But last question, because I've had this thrown at me a couple times, like what NFTs are you buying? And really, what I go back to them and say, like, I'm actually just buying ETH. I'm trying to get as much ETH as possible at this point. Is that how
Mm.
you see this right now? And like, theoretically, what price does ETH need to get to for you to be like, okay, maybe I'll rotate in NFTs or I'll focus more here as opposed to like $1,000 ETH where you're like, I'm not buying, like I have more upside here at that $1,000 ETH or $2,000 ETH. How do you make that decision?
Yeah, it's really hard to give um, any sort of like kind of strong fundamental case for where you would buy or sell ETH here, because we've seen such a jump off the bottom, and we have such a massive narrative with the merge, both pre-merge and post-merge with the staking APY. So I think if at least for us, right, like when we look at buying more NFTs here, we're solely focused on the blue chips, those projects that we know that are going to be here in 18, 36 months from now. um, don't want to get stuck in a scenario where you're going out and grabbing a rare from a smaller project for 3, 4, 5, 10 ETH, and the project kind of slowly fades into nothing over the next year. I think it's a much easier uh, arena to go out and get a discount on rares or get a relative discount on floors compared to where we've seen a lot of these blue chips already. But I think if you're going to do that between now and the merge, which is going to be anywhere from mid-September to end of September, you have to understand that you're probably not going to be able to get out of that NFT position until sometime post merge, right? So like probably October to be safe. So
Mm.
if you're still flipping out there and you're making money, good for you. You've got some edge in the market. It's too risky for us right now. We're like I said, we're looking for deals. But yeah, that's kind of how I would break it down. I mean, ETH wise, like right about 2300, 2350 is the 200-day moving average. I think if we're going to continue to move higher off of this kind of slight take profit period here, it seems for a lot of folks, that'll be some major resistance. But outside of that, I think chances are pretty strong that we break 2K before the merge, especially if we don't get any FUD from these FOMC meeting minutes that are coming out, or any other kind of like bad macro news.
Okay, so we could take this conversation two ways at this point, right? We want to talk a little bit about Sudoswap. That I feel like that story is definitely taken over the NFT space here in the last like 48 hours to even a little bit longer. Or we can talk ETH 2.0. I think because the conversation in the chat is leaning more towards Sudoswap, we should probably move in that direction. Llama's saying Sudoswap will kill incentives for free mints at the very least, unless those projects are not for profit. Flubber saying maybe they'd have to do something else to get a stack for the community wallet. So, Sudoswap, just for everybody's, kind of TLDR here, they released an AMM that's similar to what you see for ERC20 tokens, but they're doing it with the ERC721s, I'm assuming. I haven't really looked that far into it, to be honest. I haven't used the platform either. It just came out, so this is the week that I think people are going to start tinkering around with this. But a lot of the NFT space is pushing back against the 0% royalties. Some even going as far to say is like this is going to kill the NFT space, because the incentives and the royalties for teams to kind of build consistently are completely taken away in a form or fashion, right? A lot of times we're not keeping any supply of NFTs as a team because we're, distributing that to the community and we're taking royalties. Without that, where do you go to, get
Right.
funds? Maybe you distribute another stack of version 2s or things like this. So anyways, long story short, Sudoswap, give me your thoughts. Is this a good thing for the NFT space? And 0% royalties. I want to get your take.
Yeah, definitely. I think in the long term, it will be a good thing. I think it empowers NFT holders and gives them more utility with their NFTs, especially those NFT collections that are lesser known and cheaper priced. Those that like you could go in and sweep the floor for less than 1 ETH. We could certainly get into how they work, but as far as kind of the royalty piece goes, this has been a question that has come up for many, many months now on how this scales. One thing I've talked about previously is that a 7.5% fee on selling what you would consider a token is pretty absurd when you compare it to regular tokens like a Bitcoin or an ETH, right? Like some of the worst offenders in like a Coinbase or something like that are charging generally less than 1% fees on what you're trading. So when you deal with, say, a 5% royalty and a 2.5% OpenSea fee, you're paying 750 basis points, which is like for most markets is pretty absurd, right? And obviously there are benefits there because you have 5% going to the teams, right? And that will obviously empower the teams to deliver more value to the NFTs. But what it ends up doing is it kind of slowly degrades the purchasing power of NFT holders. A lot of people have been reminded of Yuga's other side launch, right? And all the ETH that got burned there. And people have kind of been saying on Twitter, like, oh man, what would have happened if that, all that ETH could be returned to holders, right? So I think long term it will be,
wasn't it? It was more of a gas issue than a royalty issue. The other side piece.
It was a gas issue, but my point is that was still ETH going from NFT market participants' wallets to somewhere that isn't their wallet, right? So like you can see over time that as these fees, especially if you're flipping NFTs, right? Like every time you're paying 5, 7.5, 10, 12.5% at the highs on some of these, that adds up after a while, unless you're making 30, 40, 50%, 20% every time you flip this NFT. So if you're flipping NFTs and you take a loss, you didn't just lose 25%, right? Like you lost 25% plus the 7.5% that you've got to pay on top of that as well. So I think it's just natural that as the NFT market, right, like talking specifically to NFTs as a market, as that evolves and as that scales, fees will go down. It's just the way that markets work, right? People come in, they're well funded, they're able to charge less fees, or they've got some unique model like Sudo, where the fees aren't as important, or they'll charge less fees to kind of bring users over at first, right, and kind of build this user base. On your point of the royalty fees, right, and how you reward teams, I mean, I'm going to kind of like take the counter argument here a little bit. I've been thinking about this and say that, I think it is good in the long run for NFTs because it disincentivizes your shittier more pump and dump teams who want to just come in and mint and reveal and release a roadmap where they either have no intentions of following that roadmap, or they don't knowingly or unknowingly have the resources to execute that roadmap. If they're not getting paid any fees, they don't have any incentive to come in and kind of pitch you something as an NFT trader or investor, that is kind of a tough trade or investment for you from the onset, right? So I think it changes the landscape a little bit to make it a little bit more difficult for teams to just kind of run in and grab money and leave. So they're going to need to go out and raise funds and like sell and create a real brand and build a real community and do the things that you want to see for NFTs to kind of continue long term versus just a lot of the flipping and pump and dump and all that.
I feel like I'm just formulating my thoughts on royalties as we kind of see this stuff come out. Like I always, it almost seemed like a foregone conclusion that royalties were going to be attached to these NFT projects and accepted by the community at large. But as the NFT space got a little bit bigger, and again, to your point, like no one should be surprised by this. Human beings, that we always tend towards like max efficiency at some point.
Mm-hmm.
You know what I mean? Like at some point it was going to get to be free for
Yep.
for anybody. So I get that. The point where I will push back though is like this it does feel like that a lot of, although you said bad projects are going to be chaffed out essentially, it does feel like there are going to be those projects where this was a really cool incentive for bootstrapping a project as opposed to raising funds. Like that's tough for some, maybe a 2-person project that's trying to do XYZ. And I will also add to this conversation that there seems to be a relative divide between the PFP and the art when people are talking about this, right? Like people say, okay, this makes sense for maybe some shitty PFP projects, but like an artist that's trying to get royalties when their art is being traded, that's.
Yeah, I agree with you there. And I think for those folks, I hope for those folks, like we love those projects as well, right? Like huge fans of Tristan Eaton's Gemma, which was he was one of the first mainstream famous artists to come out with a really cool NFT set. Michael Reeder and his Cyber Bandits is another one that I like. It's my PFP on Telegram, one of them. So those folks, my hope is that what you'll have unique innovation at the token level. And you have that with other fungible tokens already, right? Where like your algorithmic stable coins and some of these others, you can attach characteristics to the token that allow you to hopefully collect those royalty fees, right? So like you could set it up where it's like if it's transferred, some portion of a balance from the wallet or something is sent to this pool, right? Like there's obviously no solution there, and there's a lot of hurdles that would need to be accomplished to kind of get there. But knowing crypto, if there is value for developers and your more kind of like creative types on the code side to put something together like that, create a new ERC type or add some sort of new like stack or layer to NFTs, then I think they'll go through and do it, and you'll see a solution there for your good actors in the space. But I understand the pushback from a lot of folks, right? Like I think NFTs have a beauty to them in that they're not this like pure speculative vehicle for a lot of people, as is the case with DeFi and a lot of other tokens. You do have the art aspect, you do have a lot of the community aspect. So for those folks who are solely focused on that and not focused on anything speculative, it kind of feels like the rug is being kind of pulled out from under them here if all the volume leaves the exchanges with the royalty fees, which I don't think it will, and moves to these kind of more hybrid, like financialized primitives. So
Yeah, DJ Wisdom's in the chat saying almost every NFT project is lying about their roadmap, sirs. I don't know if I'd go that far, but I get where you're going with it, and I could understand the thesis and definitely lean more towards a lot of teams not accomplishing what they've laid out on their roadmap potentially, especially at the long tail of it. But so from you sent me the image of the front end with like a bunch of the different kind of I guess like infographic-esque pieces
Yeah.
there. What does this look like from the user's perspective? How is this going to change the way people trade NFTs? It doesn't have to be super technical, but what is actually happening, right, with this this AMM in the NFT space?
Sure. Yeah. Basically, it's onboarded pools that you saw in DeFi. So if you're not familiar with the way a pool would work in DeFi, there's certainly some complex math that um, it lays on top of. But basically, you pool two or more assets and are able to set a price based on the value and the amount of assets in that pool. So in this case, if you had, take for example, the based ghouls, which seems to be one that's done a good bit of volume on Sudoswap. Based ghouls, um, there's a couple different pools on Sudoswap that you can take a look at. It looks somewhat similar to an OpenSea where you have a floor price, you have the best offer, you have volume, and then you have offer TVL, total value locked, right? So basically, there are a handful of these based ghouls NFTs, and then there's a bunch of ETH that are pooled together in one bonding curve, essentially. And a bonding curve is largely just a pricing mechanism for the way that this pool works. So the way that it would work is that let's say you were able to mint these based ghouls at 0.01 and you've got 20 of them or 50 of them or something like that, or even 5 of them. You could come in here and you could take your based ghouls and you could take 1 ETH. And with your 5 based ghouls and your 1 ETH, you would effectively set a price of 0.2 ETH per based ghoul. And people can basically use your pool to swap in and out of your NFTs and ETH. The cool part here is the way that they manage the bonding curve. So you as the pool creator can choose between a linear bonding curve or an exponential bonding curve, which is basically kind of the way that the price works when one or more of these NFTs is sold. So, we're not at like a fractionalization standpoint here. Like we're not selling some portion of one NFT, one NFT where we're selling like a third of a base pool.
Mm-hmm.
What we're doing is we're uniquely pricing a handful of NFTs with these bonding curves. So I'll give you an example, right? In this kind of 5 base ghouls and 1 ETH setup, if your bonding curve is linear, you could set it up where if somebody comes in and buys your base ghoul for 0.2 ETH, then the next based ghoul could sell for higher, could sell for 0.21 or 0.3 ETH, right? And so on and so forth. So effectively, you could get for all 5 of your NFTs, you could sell one for 0.2, 0.3, 0.4, 0.5, and 0.6, right? Totaling a much higher value than if you were going to sell them all for 0.2, obviously, right? So it kind of allows you to play this kind of like timeline out. Maybe Base Ghouls has a really interesting roadmap or announcements happening or a reveal or something like this coming up over the next week or month. Your minimum price you're willing to sell them for is 0.2, but you'd obviously love to get more. You can run it that way. Maybe it's a bit different, right? Maybe Base Ghouls is a little bit shaky. You don't know what's happening. You're just kind of trying to move out of these. You minted them for 0.01, and you're just really ready to pull this ETH out. You could have it set up where with this linear bonding curve, the first is at 0.2, the second is at 0.175, the third is at 0.15, and so on and so forth, right? Which effectively incentivizes people to come in and sweep your pool, sweep all of the NFTs you have, buy them all, and then theoretically they could resell them at the current floor and make a little bit of money. The other thing is that the pool owners earn fees, right, as this continues to happen, just like we saw in DeFi, right? So
Mm.
like DeFi pools were rewarded um, in kind of like a time-based format, meaning that uh, those folks who were first to the pool and were able to pick successful pools not only saw whatever food coin DeFi go up, but they also saw a ton of fees come their way as well.
Okay. My ignorance is gonna show. We're headed into deep waters, guys, and that's why we're sitting on the Parada Capital wooden ship here, as you will. I hope you like that analogy there, Mike.
I'm just getting into this too, so like
Yeah.
chat, if any of this is if any of this is incorrect, please do correct me. You know,
So,
tweet me on Twitter and tell me how wrong I am.
yeah. Well, or
Please
just do
do,
it.
but
Do it here. Do it here because
yeah,
that's way
live.
more live. Asmodai is saying, I thought we were over bonding curves as the latecomers no longer buy at the top end. I've got a couple questions here. If you want to touch on that, you can as well. But this feels like two questions. One, the first is probably easier to answer. Why didn't Uniswap do this sooner? Right, because I think Sudoswap is a part of Uniswap, or somehow I don't know if they absorbed it and they bought the team.
Mm,
I'm ignorant there, but why didn't this happen sooner? Because it seems like all you're talking about is doing the AMM feature that's for ERC20s that we all kind of got introduced to when Uniswap first existed, which was awesome, right? Like the double-sided
yeah,
pools there where you could base, price on the other side of the pool. That's exactly what we're doing here. So why did it take literally till we're in a bear market in the NFTs to say, hey, we should do this for NFTs? This feature that's been around since Uniswap first started 2-3 years ago.
yeah.
Why did it take so long for it to come out now? And then it feels like a feature that's better for ERC20s or floor price ERC 721s, because how do I put into a pool the NFTs that have all these different rarity features and all these different things?
Right.
Like it's not just like ETH that all is essentially the same, that it's fungible. So I know that's a ton of different questions to throw at you,
No, it's
but
perfect.
if you've got it.
Yeah, I'm not sure exactly what the guy in chat was getting at. So if you want to rephrase that question there in chat, go for it. But answering the last question there first. So this was something interesting that came up in that conversation I had today, was that because NFTs are obviously not fungible, the data seems to suggest that um, potentially these like pricing estimates won't be effective because the data is not able to incorporate a lot of that fundamental value that people place on NFTs because of things like rarity, right? So the better model supposedly may be that you break down NFTs into kind of like rarity sectors of sorts, right? So if you have like all of the googly eyed bored apes, or all the zombie apes, or all the hard eyes doodles, right? Like they all have this kind of singular trait that is fungible across all of those NFTs, all those doodles, right? They all have the hard eyes. You are able to kind of make a pool out of those effectively and isolate the value based on like some combination of the floor price and the floor price of that trait or that rarity, or however people are defining that kind of fundamental value with each NFT. So to your point, it will definitely start with floors, because the floor price is going to have the most data behind it. It's going to allow people to get the most comfortable on buying and selling these things and making a market for these things. But I do think eventually we get to a point where volumes are high enough and markets are and major players are comfortable enough starting to go out that risk curve and say, okay, there are 20 of these certain trait bored apes, right? We're happy to help make set up a pool here specifically for these traits, or 100 of these traits, right? Whatever the case may be. So it's going to take some time, and there's going to be a lot of evolution with Sudoswap, but I would highly recommend people start to look at it, because you're going to have, it seems, a lot of stories of folks making a good amount of ETH, plugging their NFTs into these pools, and basically capturing a lot of this utility that is popping up here. So it is super financialized. It is super speculative. Like, I think if you're just in it for the art, or you want to hold long term, maybe it's not worth the risk yet. Kind of follow it, let it play out a little bit, let it evolve. But it does seem that based on volume and based on user numbers, that this seems to be something a lot of people are into.
Yeah, Kansas is in the chat saying here for the artist punch to the gut alpha. So we are squarely in the middle of the Sudoswap discussion. We're going to talk about ETH 2.0. Guys, if you could leave a like, if you could hit that tweet that we put out on the Twitter here, the Twitter sphere, if you will, about 30 minutes ago, that would be awesome. Get the episode out. I appreciate you guys so much joining in on the conversation. Flubber says big ETH amount and didn't want to pay 12.5% in fees on OS. I don't know what you're talking about there, or is this earlier? This was the no. Rephrase that question. We'll come back to it. Sorry, we're doing this live, fellas. So the question that I was asking,
Yeah.
first part of that question, why did it take so long for this to happen when it essentially already existed in DeFi?
Yeah, I think it's twofold. I think the first one is that for a long time, there wasn't a lot of real liquidity with NFTs. So there wasn't even a conversation to be had about other kind of more traditional market participants coming in and like, say, providing liquidity, right? And that was a positive to NFTs as the hype continued to grow, because the supply and demand characteristics were so outsized on the demand front. And as like Bored Apes were going up, or whatever collection was going up, you just didn't have much supply there to offset all the people that were trying to get one before it pumped to 1,000 floor price, right? So I think that's part of it. I think that just the market wasn't mature enough to warrant any sort of serious conversation or innovation. And I think the second part is kind of more of like a human nature or business nature, right? And that, like, Uniswap and OpenSea have built massive businesses with massive valuations. They have hundreds of people, right? And they have many, many fires to put out on a daily and weekly basis. And what you end up having is, as these companies scale and grow, you're not really as much on the front lines of innovation anymore, right? You're trying to solve like the processes to make sure you're not listing scammy NFTs on OpenSea, right? Or you're trying to move from Uniswap version 2 to Uniswap version 3, and now you're looking at like 3 pool and 4 pool type mathematical setups versus like, hey, what if we expand completely to this new asset class, right? Like, it doesn't become a priority. And as crypto so often does, it takes innovation and kind of displaces the current setup or the current market structure with things like 0% royalty fees or 0.5% total fees, and just kind of flips the market on its head.
So this is essentially a feature set that's known in DeFi, as we mentioned multiple times already, and probably existed in CeFi, although excuse my ignorance again. But what other feature sets of those sectors, CeFi, DeFi, need to make their way into NFTs, right? We're seeing the AMMs and all this stuff. Like, what other features would you like to see in the NFT space, or maybe that you don't want to see and are coming eventually? Just like this, people would say 0% royalty fees. Well, that looks a lot like other sectors that came before it, like that's, so go ahead. Sorry.
I find it hard to believe that fractionalization of some kind won't exist ever. The biggest argument against that seems to be kind of the way that NFTs work at the technical level, and the way that regulation is currently set up. Both of those things historically are overcome by crypto, so I could definitely see that in the future. I think that will effectively eliminate a lot of the problems that you see with illiquidity in NFTs right now. It'll also obviously eliminate a lot of the positive that you have with the liquidity there. So I think that's one. I think overall NFTs need more utility in general in a variety of ways, right? And the example I would give is that even with Bitcoin, right? ETH is the most obvious example, but even with Bitcoin, you can lend it out, you can send it to a variety of different people. you can use your hardware wallet as a paper holder, right? And that's me being kind of a little shitty towards your Bitcoin maxis there. But ETH as the obvious better example, right? Is like ETH is great, not just because it will act as this kind of like validation for proof of stake when we go through the merge, but also because it's your ticket or your kind of gas or money for all of the innovation that exists around ETH, right? And I think that's one of the reasons that other L1s have struggled so much is that yes, you can stake Solana or AVAX or whatever and earn 4% or 5% under their proof of stake setup. But like outside of that, there's really not much to do with the token. I mean, you can do all the same things on ETH that you can on AVAX, right? So there's not anything unique and innovative that is happening there generally that would incentivize you to sell your ETH and buy AVAX and use it in that way as far as utility goes. So I think we need to just see not just like this kind of broad financialization that's going to improve a lot of the like say liquidity characteristics of NFTs, but I think we need to see project founders as well continue to innovate on the way that their NFT delivers utility. Like it's pretty straightforward, right?
Mm-hmm.
Like you're going to get access to a Discord. That Discord is going to allow you to meet other community
Don't
members
shit
and
on my
work together
merch.
towards the merch, right? Towards whatever the goals are of the broader community, right? You're going to get some merch, and like outside of Moonbirds doing the nesting piece, which is now kind of biting them in the ass a little bit here as they have a huge rush of selling here as people are on nesting because of the CCO FUD. Outside of that, like we haven't really seen any unique utility pop up, right? Maybe I'm not paying attention. Maybe there's some kind of huge new wave of utility happening, but that's really what I'm excited for, right? Where it's like, yes, I love the art. Yes, all my favorite talking heads on crypto Twitter are in this. Yes, I think it will do well over the next 6, 12, 18 months from a speculative standpoint. But oh, by the way, I can take this NFT and do all these other things with it that we have yet to see from founders. So I think it just needs more general utility baked in. That utility will go through its own hype cycle and it'll kind of wash out the pieces that people don't want and hopefully keep the ones that people do. So that's what I'm excited for.
Yeah, great breakdown there. Guys, I'm sitting with Mike Finch from Parada Capital. This is the Nifty Q Show. We do this every Tuesday and Thursday, 2 to 3 p.m. You can find us on Spotify, Apple Podcasts, all that good stuff. Flubber is saying, yeah, OpenSea is now much more tied down legally versus a small team throwing up a service. Asmodai says, as far as bonding curves may be innovative, majority of curves fail to attract enough new buyers at high levels. Why should this be any different?
Yeah, it's a good point, right? I think the complaint against bonding curves is that it makes a lot of sense theoretically, but eventually you get to a point where people feel like they're kind of like the last ones in the game. And I think you're going to have a good bit of that with Sudo. If you look at the pools that exist there today, it's mostly lesser known, cheaper priced projects. Just as you saw Uniswap get big with those in the early days, right? It wasn't like expensively priced tokens that got people excited. It was like, the token is 0.0001. And if you happen to hear about it and can ape in the pool early, like I said earlier, like not only are you going to get all the fees from the volume of people coming in the pool, but the token's also going to go from 1/1000th of a penny to
Those DeFi
10
days
cents.
were amazing.
Those DeFi days, you could make a lot of money, right? So I think it will be interesting to see how Sudoswap continues to evolve, right? Not just the bonding curve setup, but also what they do past that, right? I hope they don't stop there and they continue to kind of do innovative stuff. But yeah, it's a good point for sure.
So I saw a comment on Twitter that said basically that Sudoswap is the first one coming out, and I don't even know if that's true, but like their stake in claim is this 0% royalties feature, this AMM feature that can be easily copied, right? We saw that with
Right.
Sudoswap as well. When Uniswap first came out, they were like, here's, a great innovative product. Well, people iterate so quickly in the space that tends to happen. So we get
Right.
competitors really quick. Okay, guys, we do have to move on pretty quickly here. Mike, we always have like a understanding that if you want to take the conversation in a direction that you see, maybe a different route, let me know. Just bring it up. I feel like we're pretty free flowing, but we tend to stay on task here on the show. So ETH 2.0, unless you have any other last thoughts on Sudoswap. Did you have anything else?
No, not on Sudoswap. I mean, I think I guess my main point, right, like any kind of sort of like lasting alpha I could give is that while there are some things happening in NFTs right now, as far as like royalty fees and a lot of like change at a point when floor prices are down based on historic levels, it feels like there's things are not necessarily kind of moving up, right? Like this is good long term, and I think by the end of the year, most people will be very, very happy with where NFTs are relative to where they were at the beginning of the year or even now. I think this general growth of NFTs into more of like a broader scale crypto asset that a wide variety of crypto market participants can use is going to end up being good for your art focused NFTs or for your community focused NFTs or your DAOs, right? Like all these different really non-speculative things that NFTs have allowed Web3 folks to do. So just understand kind of where you are in the market cycle for NFTs and continue to if you're passionate about it, continue to stick with it and do your research to try to understand what's happening, right? What is kind of growing and what's being innovated on so that you can hopefully understand kind of what is coming next.
If they want to follow you, they just go twitter.com/thatfinchguy, correct? I think I have that in the description as well. But is there anywhere else you're posting your musings other than these Telegram chats?
No, yeah, mostly Twitter. I've been trying to be more active on Twitter, right? Like it's kind of a mix of thoughts on crypto, anything like short term to long term. NFTs definitely a lot, and then some shit posting thrown in there too, just to keep things fun. So who knows? Maybe I'll hop in with the VCs and do a Substack one day or something. But
Listen,
for now, it's Twitter.
If you want to do that, there is an opening on the network for you to hop in there. Let's see. Did he just tell me to diamond hand again? Yes, we're diamond handing all over again. Buy low, sell high, as Mike Finch would say. Not financial
So
advice.
easy, guys, right?
Yeah, exactly. Why isn't everyone doing that? Okay, we've come to the last of the 3-point tripod that I was looking to get into. The potential rocket fuel that will take us to Valhalla, or the atomic bomb that will completely destroy the market for another year. ETH 2.0. I don't know where to take that. Give me a bullish case. Give me a bearish case. Let's start there and see where we can go. I know we only have about 10 more minutes left with you. Usually we like to keep it like an hour. So
yeah,
bullish, bearish.
Yeah, I'll start with the bearish, right? Nobody wants to end with bearish. So the bearish case outside of the merge completely failing, right? Which I think would be very, very rare. I think it's highly unlikely with all of the testnet merges that we've gone through that we'll see that. Effectively what has happened is all of the various ETH testnets have already successfully merged over the last 4 to 6 months or something like that. I think it started in May or June. Some of them had very minor issues, like some orphan blocks here or there, but there was nothing that delayed the current ETH proof of stake merge roadmap, right? So for that reason and others, I think it's highly unlikely that the merge has some sort of like catastrophic issue where nobody knows who the right chain is. Obviously there's a lot of talk about this airdrop that's coming out. There's a famous kind of fork guy, if you will, who is gonna launch an ETH proof of work chain, and
Who's that?
a lot of that's Chandler Guo.
Chandler Guo.
Yeah, and Justin Sun has pledged a bunch of money there. So kind of all your usual characters. Salute, right? All your usual characters there, trying to make sure everybody gets some free money. There's always some concern about like, okay, well, if I have, assets on one chain and assets on another chain, like how do the asset deployers know which chain is which, right? This is something that ETH went through whenever it merged with ETH Classic. It's called like a replay attack or something, and that's largely solved because you have unique blockchain IDs or identifiers, right? In the same way you have a token ID for an NFT. So I don't think that's going to happen. I think the more pertinent bear case for ETH proof of stake is that it ends up being this kind of like coagulation of open interest and speculation that does not lead to any further adoption of ETH in its proof of stake form from, say, your institutional folks. So, like, one of the main narratives, is that with the new ETH staking rate, and because of EIP 1559, where it will largely move ETH to either a net zero or a net negative issuance rate. ETH's current inflation rate because of miners is somewhere around 4%. Post merge, at the current activity levels, it'll be like 0.5%. So the thought is, if the staking rate's 7%, and you start to get a whole bunch of money flowing into the system, and the ETH price goes up, maybe it gives people more incentive to kind of come in and gamble a little bit more, which flywheels the price of ETH up further, because the net issuance of ETH is now negative, right? So you kind of run into this like deflationary spiral of sorts. So the bear case for me is that you don't really see any large money come in. You don't see any new retail money come back in or come in. You don't see any sort of like unique proof of stake narrative. And all of the open interest that has built up and all of this speculation that has built up just collapses on itself, and we kind of go back down towards
Falls flat
1K ETH.
is what you're getting at.
False flag, 100%. Maybe there are some small issues there, but largely just like a non-event. I think that's your biggest bear case.
Okay. Go ahead.
I was gonna say the bull case is some of what I mentioned there, where basically from a macro standpoint, you have things cooling off. We saw yesterday, early morning, that China has decided to start printing money in a variety of different ways again, right? And I think the sentiment has started to shift from a macro standpoint a little bit more towards the Fed being forced to slow down their rate hikes. So I think, max bullish case for ETH going into merge is that the CPI on September, I think 10th or 12th it is, comes out and it's lower than expected, and it's lower than last month, which we saw in June or July was like 9.1. The most recent CPI was 8.5. So let's say we get like 7.9% in September. What that's going to do is that's going to signal to the broader macro markets that inflation has indeed peaked, and the Fed, the broader market is basically going to look to the Fed to say, hey, you don't need to continue to raise at 75 basis points, right? So maybe the Fed raises at 50 basis points. And all of the money that's sitting on the sidelines, all of the money that has fled risk markets because of recession fears and Ukraine war and the collapse of the European Union and blah, 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 all of that is going to flood in. And it will flood in at a time when ETH has a brand new narrative that delivers stakeholders a staking rate that is somewhat competitive to the rate of inflation, right? I think the estimate currently is about 7% on staking your ETH. So what you're going to get is you're going to get these major institutional players who are going to come in, and they're going to create a variety of different structured products that will take that 7% rate and try to do unique things to increase it to say like 9 or 10 or 11%. And they'll go and they'll sell that structured product to hedge funds and and mom and pops and all this, right? And then the net result of that structured product is going to be some form of spot buying and futures shorting, right? Which is what you see currently in the ETH market. It's what we saw with the Bitcoin run up, where there was so much demand for Bitcoin, and the basis, which is the price of spot versus the price of futures, was so high, got as high as like 30%, that people would come in and continue to run the same play. You buy spot, you sell futures, and eventually that price would converge. So it's, all to say that if the macro setup is actually turning, and we have seen the worst of inflation and we've seen the worst of the macro setup, then ETH will be hitting that Fed pivot and that macro pivot with the strongest narrative it's ever had, at a time when Bitcoin is kind of still struggling with its own inflation hedge narrative, and at a time when trillions and trillions of dollars are going to be coming back into risk markets, hopefully creating this kind of deflationary spiral on ETH. So
let's go.
It's obviously kind of a wait and see moment, but and certainly we need to get past the merge, but like largely we are very bullish ETH. We think, from a probability standpoint, the chances are high that we see a new all-time high on ETH by end of this year.
Okay, I love that take. Love that you're on the bullish side there. Super optimistic about it as well. I am a perma bull though, so take that for what you will. Guys, drop in the chat the last questions. ETH 2.0. We have Mike for like 2 to 3 more minutes. So it has to be lightning questions here. DJ Wisdom saying, what if Richard Hart launches Pulse Chain at the same time as the eFork? That's kind of, I think he's just joking around there. I have 2 quick questions that I would like for you to answer. One, are you surprised that this is actually happening? They've been talking about ETH 2.0 for 4 or 5 years. Are you surprised that it's happening? And then we'll get to a couple more lightning questions and get you out of here.
Yeah, the cynical piece of me is like, certainly this won't happen right after we get, like bullish CPI news or anything like that. But it's been a long time coming, and the timing makes sense with other upgrades they have made.
Okay. Other lightning question. I wish we had more time to go into this, but there is this idea that there's going to be an airdrop, and people are going to get this influx of whatever the ETH fork is going to be.
Proof of work. Yeah.
There's also the opportunity to have NFTs on both chains. If you can quickly, tell me how people should be playing this. Not financial advice, anything like that, but if someone's looking to get, double up on their ETH or double up on the NFT thing is like a whole nother thing. But tell me how they should be playing this merge.
Yeah, the NFT piece is not going to happen because of those chain IDs that I talked about. But the best thing to do, and I think the kind of quote unquote keep it simple, stupid model, is to just hold ETH in a wallet that you control, right? A wallet that you're going to be able to access that isn't going to be like, say, an exchange wallet where the exchange can say, sorry, you're not getting any of your airdropped ETH proof of work coin because we only believe in proof of stake, right? So you want it, move your ETH to like a MetaMask or something where you control the keys, and you're going to have the ability to kind of go in there and run the setup to get this airdropped coin. The other piece that I'll note on the airdrop, and I think this is important to the bull case of ETH as well,
is that last question too. Go ahead.
Sure. Is that I think there's ETH proof of work is currently traded, I think at something like $76 per ETH proof of work, which is like just about 0.04 the value of ETH. At the time it was at $76. That's $9 billion worth of money airdropped to ETH holders, right? So if you understand that, like, there are a lot of proof of work miners out there, and they have huge incentive to continue to operate these miners, and we get the ETH proof of work chain at like 0.1 or 0.15 or 0.2, this is going to be billions and billions and billions of free dollars airdropped to people that they're going to either convert to ETH, or they're going to take to Sudoswap or to DeFi or whatever, and it acts, in the same way that the stimulus packages did during COVID.
So temporarily, is there going to be a doubling up of like a market cap, for example? I think CryptoPhasia is as well asking, will making 2 Ethereums add hundreds of billions to the crypto market cap? That'll be the last question.
Yes.
Okay.
Now, I don't know about hundreds of billions,
Yeah.
but that airdrop money will go somewhere, and it's highly unlikely that the majority of it will go out of the system.
Okay. And yeah. All right. We got to let Mike go. He did have a call to get into after this. We are going to do this more, Mike. If there is a spot that you would like to, have on a Substack potentially, we can maybe work that out too. But thank you so much for coming in today. Of course, we'll have Mike on again. If there's like this other thing that pops up, if there's a big piece of news or some type of thing that is in the industry, we'll have him back on. Otherwise, we'll look to do these every quarter, every month, man. I appreciate it so much.
Happy to be on. Cheers, guys. See you next time.
OVOT.